Hello and welcome back to my channel. My name is Raitzel Ferovs and I'm part-time investor and trader, and you're here at Farewell Total Return Investing. A few weeks ago, I've invested my money into the Amazon stock, and today we will evaluate together if the Amazon stock is a good pick to profit from the current bull market. As you may have noticed, all the major indices, the S&P 500, the Nasdaq, the Dow Jones, have seen a huge upside growth since the end of October. And the S&P 500 is up more than 14% since it's made its low on the 30th of October. And the Amazon stock has profited from this major uptrend as well. And the Amazon stock is nearly up 30% from its low made in October, which leaves us with the question if it's still a good buying opportunity or if we have all missed the train. Let's dive deep into the fundamentals of the company structure to determine whether it's a good pick or not. As you may already probably know, Amazon is the world's largest online retailer and has grown rapidly in a broad range of businesses, including core e-commerce operations, cloud services, and digital marketing. The online stores make up a huge part of the Amazon business and make up 42.8% of the total revenue. And Amazon's core business revolves around its online retail operations. The company operates in an extensive online marketplace where it sells a wide range of products directly to consumers. And the revenue is generated through sales of goods, and this includes physical products and, of course, also electronic products like books, etc. And second, we have the third-party seller services, which make up 22.9% of the profit. And Amazon allows the third-party sellers to leverage its platform to reach a much more global customer base. And these sellers pay fees for using the Amazon marketplace, and Amazon also takes a percentage of each sale made by the third-party sellers. And the services for third-party sellers include access also to Amazon's customer base and also the fulfillment services like Amazon FBA. Lastly, we have the Amazon Web Service, short AWS, which makes up 15.6% of the total revenue Amazon makes. And AWS is a significant contributor, of course, to Amazon's revenue and profits, especially in the last few years. And Amazon provides cloud computing services through the AWS service and offers a range of solutions such as computing power, storage and database, and machine learning. Businesses and individuals pay for these services, and AWS is widely used across industries for its reliability and also scalability. The last two sectors, we don't have to mention them because we have the advertising services and the subscription services like Amazon Prime, etc. They only make up a small part of the revenue. And as you can see, Amazon has expanded its business considerably over the past few years. And now let's look at the current chart. As you can see by looking at the chart, the stock sits at $153 at the time of the recording, which is the 19th of December 2023. Next, we're going to take a look at the financial strength of Amazon. And Amazon has a cash to debt ratio of 0.47, meaning it couldn't pay its debt using the cash in hand they have. That's why it's important also to look at the interest coverage ratio, which shows how easily a company can pay interests and expenses on outstanding debt. And Amazon has an interest coverage ratio of 13.88 as of September 2023, which is considered pretty high. Ben Graham, the father of value investing, requires that a company has a minimum interest coverage ratio of 5, and with the companies he invested in, and if the interest coverage rate is below than 2, then the company is burdened in debt. Next, we're going to take a look at the profitability and growth of Amazon, and to determine the profitability of a company, I usually like to use and look at the operating margins of a company, And throughout this years, as you can see on the graph, we have seen an increase in operating margins. And as of September 2023, they are at 7.82%. And they have a earning per share of $1.93, which is projected to continually rise in the years analyzed by analysts. And all in all, Amazon managed to stay profitable 8 years out of the last 10 years. And 3-year average of the annual revenue growth of Amazon is 21.9%. And it's ranking better than 83.84 of the 1,046 companies in retail space, also like Amazon. In the next step, we're going to compare the return on invested capital to the weighted cost of capital. And the return on invested capital measures how well a company generates cash flow relative to the capital it has invested in its business. And the counterpart, the VACC, is the rate that a company is expected to pay on average to all its security holders in the finance to finance its assets. And Amazon earns returns that do not match up to its cost of capital, which will destroy the value potentially if it grows, which is a key factor to consider when buying this stock. By taking a look at the seasonal chart, you can easily determine when it's the best time to invest into the stock market. And well, as you can see, this year the seasonal tendency played out perfectly in our favor, and the end of October marked the low of the bearish decline, and now we can expect a run up higher into the end of the December. And note that seasonalities will never repeat every year, and the seasonalities have to be aligned with the general tone of the market. So you please use it only as a confluence and not as a key part of your analysis. So let's move on and take a look at the technical analysis, which I also like to use to determine the entry point and when to get into the market. So as you can see, we have the Amazon chart up on the top and the Nasdaq chart down below. And as you can see, we have formed a divergence a few weeks ago from the time of the recording. Amazon made a higher low while the Nasdaq failed to maintain its bullishness and made a lower low, meaning that the Nasdaq is the lagger and that the Amazon stock is the leader of the both, and that you should preferably buy, of course, the Amazon stock because it's the leader. It made a higher high, and Nasdaq had to accumulate new long orders by dropping below into the sell side liquidity. And we had a perfect entry opportunity at the daily order block coupled with the daily fair value gap you see in the chart. And from there on, you can see a perfect response. And then we have seen a few days of bullish momentum, and now we're a little bit in profit with the stock. And as you can see, we have outlined 3 potential targets where we want to see the stock trade to. First of all, we have the $160 mark, then the swing high, which is at around about 172, and then we have the buy side liquidity with the relative equal highs at 190. So these are our 3 targets which we are aiming for with the trade. Of course, the third target is always the best case scenario, but we will already take a large portion out at the first and second target, which we outlined here to secure our profits and take partials on the way to the upside to secure profits. And by the time of the recording, while we did our research to this Amazon stock, we have found an interesting news, and Amazon is reportedly in active negotiations to invest in bankrupt Diamond Sports Group as part of its strategy to expand its presence in the sport streaming. And the potential deal includes a strategic investment and a multi-year streaming partnership with Amazon Prime Video service, becoming the official streaming platform for the Diamond games. And Diamond Sports Group, a regional sports network operator and subsidiary of Sinclair Broadcast Group, filed for Chapter 11 bankruptcy protection in March and the company is currently undergoing court proceedings to determine whether it will proceed with Chapter 11 or face liquidation in the worst case. And Diamond Sports Group acquired broadcasting rights for 42 teams across the MLB, the NBA, and NHL in a 9.6 billion deal with Fox in 2019. However, the RSN faced financial challenges, accumulating over 8 billion in debt and experiencing overall cable declines, leading to its bankruptcy filing. And in the deal, if the deal goes through, it would further strengthen, of course, Amazon's position in the sports and streaming market. And Amazon has been increasingly active in securing streaming deals, including the recent debut of the first Black Friday night of the NFL game, and the company's aggressive approach in securing sports content aligns, of course, with the broader trend of the tech giants which are entering the streaming space. And Amazon stock saw a 3% rise, as you could see in the chart, following the news with the shares of the Sinclair, the parent company of the Diamond Sports Group, which rose also over 2%. And Amazon and Sinclair declined to comment on the speculation, of course. Nothing is graved in stone right now, but this move by Amazon just reflects its ongoing efforts to capitalize on the growing demand for sports content in the streaming industry. So, in conclusion, friends, we can say that the Amazon stock is still a lucrative investment, even for a short-term trade going into the beginning of the new year. And Amazon's business with this has a solid grounding, and it will probably see massive growth in the future. And I would say that's it. We are invested in this stock. This is no financial advice. I'm just sharing my opinion. So please don't take this as financial advice. Join my Telegram channel for regular updates. Leave a like and subscribe so you don't miss out on any future video. Stay safe, trade safe. Bye.